Stocks got crushed, they got smashed, they got hammered. But is it just one day or 1 week, or is this something bigger? We are going to talk about number one, dropping like a rock. I'm going to tell you what has happened here, show you the stocks that are down 50% plus from their peak. The second thing I want to look at is Bubblelicious. What we've seen over this period of time, how these stocks have come to where they are. I've got all different indicators surrounding that. And the third thing is, who wins? If interest rates are going to rise, if there is going to be a tightening, who's going to win? Which stocks are going to win? What individuals are going to do in order to take advantage of the situation? I've got all of that and more. Let's begin. Here you can see the stock market. In this case, Dow tumbles more than 500 points to end a volatile week. S&P 500 sheds 1%. If we look at the S&P broken down, you look at it for yourself. It's been up and down, but since this point, right around early November, the 8th of November, the stock market basically hasn't really moved. It's been volatile to say the least. And we are down below that. That happens to be the S&P 500. But if you look at, for example, the NASDAQ, we are definitely further below where we were during that same period on the November 5th. In this case here for the NASDAQ, it had come up considerably. Of course, we can go back further and further and look at how far it has come. There's no question. But we have to understand, is this part of something bigger? Or maybe it's just a week, maybe it's just a day, and only time will tell. Looking at this, you can see what got smashed throughout this week. Energy is that black line there. Financials, being the yellow, they didn't do quite as bad, but certainly it is not in the positive. What did do well? Healthcare. That's right, of course, because let's just say the government will be giving them more money, and so the profits are certainly there. There's no doubt about that. You could look at this chart and see the others if you're interested, but of course technology and energy not doing well throughout the period. One of those tech stocks being Apple. If you remember, just for a brief moment, Apple went absolutely berserk, seemingly for no reason. Why was that? Well, the news was reporting that Apple is not affected by what happens throughout the period. Strong stock, good demand. If interest rates rise, if there is a taper, you don't have anything to worry about. But of course, doesn't seem to be the case, at least in the short term. All right. So that's a $3 trillion market cap, has yet to be able to exceed that, but maybe with enough quantitative easing going in its direction, maybe buying some more corporate bonds, maybe they can find their way to get that to happen again. Well, maybe Apple might be able to cross that line. The only reliable trend in the stock market right now is wilder swings. Now, I've been talking about volatility for a while. There's no doubt about that. I've been showing you that volatility is certainly here to stay for this period. What does that mean for you? Well, this article gets into a few facts. NASDAQ 100 moved violently with the Fed turning more hawkish. Volatility grows on loss of bull market ally. All right, now you could look at it. There's a lot of detail. As always, I don't have time to ever read these articles in depth, but you could see a few charts that I thought were interesting. The market has spent the last few weeks digesting the likelihood of an accelerated taper schedule, beginning with a contraction in software multiples throughout earnings season, despite strong operating results relative to strong guidance. It's a reminder that the Fed action in this coming year could be more impactful after nearly 2 years of fearless trading in the riskiest of risk assets. It's so true. It's not just tech. It's not just the NASDAQ. It goes all throughout. Look at how much risk is being taken today. Year-end turmoil, the NASDAQ 100 is heading for one of its wildest Decembers in decades. Going back the last 20 years. Sure, this does happen. It does get wild, but to this degree, it's unusual. NASDAQ 100's big move days are piling up. So I will cover that all for you. I don't want to bore you with the details. If you are interested, taking a look. This is part of what we'll talk about later. US defensive shares had their best week since April 2020 versus cyclical stocks. So it's just showing you here, because the money's not disappearing. It's not, going out the window. It goes somewhere. And there are always going to be winners and losers. But individuals, retail investors, they are typically more invested in tech stocks and they take big bets. Net worth has never been higher. And as they say here, connecting with that, Morgan Stanley says this, or as tied to the stock market. So people have been investing more than ever before in the stock market. And as a result, when the stock market goes down, net worth goes down, people feel the pain very quickly. Now, where we have seen some excess has certainly been right here with ARK, Cathie Wood. Cathie Wood came out of nowhere, bet heavily on Tesla and other names, and as the stock went up, you saw ARK ETF going up like crazy, and she got a lot of attention, certainly being in the media, interviewed by everybody, and now things have turned around. So I'm going to show you, if you hang in there just a minute, I'm going to show you which stocks are down 50% plus. ARK, I believe the innovation ETF down 40% or so from its peak. And you can look at this right here. They're just trying to compare the NASDAQ 98 to 2003 compared with ARK 2016 to the present. What has happened? Well, certainly it looks very similar to say the least, but we don't know what's going to happen in time. Okay, we really don't. But it just shows you an interesting parallel. Okay, now that's what you came here for. That's what you stuck around for. Take a look. These are the stocks that are down heavily. If you look on the right-hand side, I'll pull out the highlighter. Price change from the 52-week high. You've got some names like Tilray, Canopy, Sundial, down 80% plus. What about Peloton? Down 77 plus. Initially, Peloton went down because everybody's going back to work. They saw people going back to the gyms. Okay, the subscribers are not necessarily joining up like they did in earlier 2020. So they had to bring their price of their equipment down, signaling they need to restart the growth. And of course, now they've got into some other trouble, okay? But you go down here and you see Virgin Galactic down 74%, Robinhood, not sure why that ever was at where it was to begin with, 71% down. BlackBerry, why does that exist still? Penn, all right, you got Wix, all right, going down. Zoom, Pinterest, DraftKings, okay, and a bunch of the other names, okay? A lot of these names in here were so hot back in 2020, massively, but things have changed. Like DocuSign, for instance. Okay, everybody is, staying at home. DocuSign is being used more than ever before, just like Zoom. So now it's really popular. But I told you about the reversal trend. We talked about that months ago. If people are going back to the office, things are going to change for those stocks. So anybody who took advantage of that, really, really kudos to you on that. What about the QQQ, the NASDAQ? What has happened here? And what does this tell you as an individual, as an investor, but also just to see the trends? Look at the breadth. What does that mean? Well, as they say here, consistently fewer long-term uptrends. What we have here are the stocks that are making new highs, but the QQQ representing what's happening in the NASDAQ, essentially tech stocks. What's happening with, the breadth? Essentially just saying, like, how much of the NASDAQ is going up? How much of the stock market is going up? Well, it turns out that many stocks are going down. I just showed you just a few names, some extreme examples, but this is giving us this idea that we are not dealing with strength. Where I have this line, that's approximately, April, May timeframe. And what are we seeing here? We're seeing lower highs, lower highs, lower highs. What does that tell you? That is a bearish trend. It can reverse trend, no doubt. It can reverse trend, but we want to see everything going up nice and easy, not just the stock itself, but the indicators going up as well, all different indicators. Okay, but that's not happening. That isn't happening, and it's especially noticeable with the NASDAQ. And as you can see, Bank of America Fund Manager Survey highlighting long tech remaining the most crowded trade. And when that usually happens, the crowd goes in one direction. Not so good. Actually, it usually starts off really, really good. And then suddenly it flips. Okay. And I'm going to finish off this video really quickly, but I wanted to show you the Buffett indicator. Now, the Buffett indicator essentially saying how, in a historic sense, how crazy are things right now, or how undervalued or overvalued. Buffett indicator, value versus historical trend since 1950. And looking at that right now today, by the way, this red line, anything above this red line is indicating strongly overvalued. Okay? This white line, meaning the historical trend line. And now today, we are seeing truly excessive levels, higher than we have ever seen in history. And this is not the price. Remember that. It's not how high the price has gone. Because surely as time goes on, the price can go higher. But when you measure it against other things, whether it's measured against history, measured against the GDP, measured against gold, measured against wheat, you can measure hours worked to buy the Dow, hours worked to buy the S&P, like all these different ways of measuring. In basically every single possible measurement, we have exceeded what we have seen before. And I had to tune in. There was one individual out there, very popular channel, millions of subscribers. And I just kind of flipped through the video because I saw the title and I wanted to just see if it was what I thought it was. Talking about the markets, interest rates, Federal Reserve gonna hike. What does that mean historically? And the individual said that while there might be some short-term volatility, the stocks are gonna go up. So buy. He said that. He said buy in. Okay, direct financial advice. And while that might be the case, I think like anything else, I'm struggling to use the words because of the censorship, but whatever you're going to take in, you would want a warning label, right? You would want to be able to read that warning label, but they don't do that, of course. We know how this stuff works. Sorry, I can't use the words I want to use, but anyway, we want to see those warning labels. What are the risks? What could happen? Not look at the reasons why you need to buy. It's okay, you do what you need to do for yourself and your family, but here are the risks associated. And then you make the decision for yourself. No, that's not the way this works. It is all about simply ignorance is bliss. You take the information as you see it necessary. Please do what you think is right, but at least be knowledgeable. That's all. This is what could happen, of course, to any country, to any currency. Turkish lira stocks sink amid inflation concern. Inflation getting hot, but wait a second. Currencies being devalued significantly, inflation going crazy, but the stock market fell. But I thought, based on what so many people said, that if inflation is a problem, meaning it's going higher, well then I'll just buy stocks because then I'll be protected. It doesn't work like that. Not necessarily the case. People need to be aware that, please. This is one current example. Now, is Turkey the same as the US, the same as the UK, Australia, Canada? No. but it's highlighting the example. It doesn't always go Venezuela. It has its own direction. If you appreciated the information, hit that thumbs up button. It's right down there. What are you doing? What are you waiting for? Don't go anywhere until you hit that thumbs up button to support the channel. Are you subscribed? Even if you think you're subscribed, you might not actually be subscribed. Can you believe it? They're unsubscribing people. I lose subscribers. That's how crazy it is. I want to show you the stats one day to actually give you some insight as to what's going on. It's crazy, but I hear from people every single day telling me that they are unsubscribed even though they watch every single one of my videos. So hit that subscribe button, hit that little bell, and always make sure to come back every single day because I bring you the real deal. If you appreciate that, hit the thumbs up right down there. If you haven't seen this video yet, you definitely want to check it out. So just click it and I'll see you there.